If I had to start with $500 all over again, this is exactly how I would start to take my $500 into potentially six figures. I may be trades and I've been trading for about 5 years now. And I started my first trading account with $239. Fast forward 5 years later now, I have a six-figure trading account and I make consistent profits every single day, following my game plan, following my strategy, and staying consistent no matter what the market throws at me, right? So before we dive into this video, you guys got to understand that market conditions are always going to change. So you got to be prepared to always adapt. You're never going to become a 100% trader. There is no such thing. There's always something new to learn, something new to adapt to. There's always a consistent learning curve in this game, right? But if I have $500, this is exactly what I would do. Step number one, right? I would definitely try to pick a strategy that works for me, right? So like there's a bunch of videos out there. I'm pretty sure if you're just getting started, you probably have $500. You've probably seen half of the videos on YouTube, right? So you have swing trading, scalping, you have day trading, you have all types of different strategies. ICT, smart money concept, doesn't matter, right? Do not complicate trading at first, right? This is what happens. You want to start out as basic as possible. And then as time goes on and then you grab more experience and you learn more, then you could probably add a little bit more other things to your style if you want to. You don't have to, right? So I would definitely identify what trading style works for me. So in my case, for example, right, I've always been more into the day trading / scalping side of things. Never been into swing trading, never been into any of the other stuff, right? Never been a big believer in indicators as well either, because my thing with indicators is they fluctuate too much. So you could have, for example, an SMA right now, which is a line on the chart, right, to kind of tell you volume, pretty much, right? It could be pointing up right now, right? Just because there's a bullish 5-minute candle. But the moment there's a bearish 5-minute candle, then it's pointing downwards. So it kind of changes its mood too much for me, right? So I like things that are very solid. So solid things to me are market structure and price action, right? So I will focus on understanding market structure, candlestick analysis, and price action, right? So what do I mean by that? As long as you understand where you are in that market, you're golden, right? So for example, in a bullish market, you have higher highs, higher lows, higher highs, higher lows, right? Well, what happens? If you're in a bullish market and you see price coming down, there's nothing to stress about because you have to understand, okay, where am I in this market? If I just went and created a new higher high, well, it's normal for price to retrace a little bit to create a new higher low. So what am I doing in that sense at that point? Then at that point, what I'm looking for is where is price going to potentially find a support to then start bouncing back up to go and create a new higher high, right? So as long as you understand where you are in the market, pretty much you're golden. Now you add candlestick analysis, right? What's candlestick analysis? Candlesticks are going to be your entry point, right? So what type of candles to focus on? You have engulfing candles, you got double bottoms and double tops. And pretty much those are the two main ones that I will tell you to focus on right now, right? So engulfing candles are pretty much, you have let's say a bearish candle, right? And then you have a bullish engulfing candle that completely overpowers that bearish candle. Well, that's an engulfing candle, especially that now in confluence with I am at support level and confluence with I'm in a bullish trend. Well, that most likely will be the beginning of, okay, we're going to start coming back up now because we already found some type of support. So those are the candles you want to look for so that you, boom, I might enter my trade here and then hold it on product to previous highs. And then from there, take profit. And then from there, go ahead and target new highs, right? So those are the things that I will focus on. Now, what else would I focus on? Start with trading forex pairs, right? So you see online people trading indices, people trade futures, people trade, Dow Jones, gold, NASDAQ, all these different things, right? I would recommend 100% start with forex pairs. What are forex pairs? You have Euro USD, GBP USD, GBP JPY, NZD CAD, so on and so forth. The list goes on. It's a million of them. Literally forex pairs. Why? Because they are not as volatile as, let's say, indices on the other hand, right? So pretty much what happens, if you're trading something that's not as volatile, especially when you're a beginner, it gives you that breathing room to be able to pretty much like practice. You know what I mean? It gives you that breathing room for you to understand, okay, so these are the patterns in the markets. This is what an engulfing candle is. Okay, my trading style adapts to this, right? And then as you gain experience trading that, right, and then you get comfortable, then you go ahead and move on to indices. So in my case, for example, right, I started with trading Euro USD 5 years ago. And then from there, I traded GU. After that, I traded EJ. And then I went to GJ. And then fast forward probably 3.5 years later, then I transitioned to indices, which was US 30, right? But I already had gotten years of experience trading regular forex pairs. So I was able to pretty much test my strategy, test my analysis, test my style of trading, understand the candles, right? Understand the market structure. And then once I jumped into a market that was way more volatile, then it was easy for me to adapt and understand what was going on and kind of catch on the game quick, right? So that's something that I would definitely recommend for you to do, is definitely start with forex pairs, right? Start with forex pairs, understand risk, price action, market structure, and then definitely risk management. That's like key. Like, do not start this game unless you fully understand risk management, right? And what do I mean by risk management, right? So you have $500, right? So that's your budget. $500 is what I'm starting with. Cool. How much of that 500 are you going to risk per setup? Understanding that you're a beginner, understanding that there's going to be losses, right? So what amount of money are you comfortable with risking per setup? That's a question that you got to ask yourself, right? In my case, I always divide by 20. So I like to give myself 20 opportunities because I feel like it's not that it's impossible, but it's damn near impossible for you to lose 20 trades in a row. So imagine, so $500 divided by 20 is how much? $25. So you're going to risk $25 per trade. Now, there's something called risk to reward ratio, right? So that $25 you're risking, you want to get either $25 back or $50 or $75. Why? 1-to-1 risk to reward means you get back exactly how much you're risking. So if you're risking $25, you're going to get back $25. 1-to-2 risk to reward means you're going to get double what you're risking. So if you're risking $25, you're going to get back what? $50. And how do you identify these zones of the market, right? Well, that's all, again, based on your stop loss. Whatever your stop loss is, that's going to be your first take profit as well. So let's say in regular forex pairs, right? You're risking 20 pips, right? So if you're risking 20 pips, your first take profit is going to be at 20 pips. Your second take profit is going to be 20 pips from that one. So 40 pips away from your entry, so on and so forth. So that way, as you're hitting each one, it's okay, 1 risk to reward, 2 risk to reward, 3 risk to reward, you know? And that's up to you after that then to kind of identify whether you want to take profit in between of that, right? So me, pretty much, bro, over time, I've noticed that there's a beauty in compounding, right? So when we first get it started, we want to hit this home run. Call it as it is. You got $500 right now, and you want to turn it into $50,000. Little do you know, it's not going to happen tomorrow. It's not going to happen next week. Most likely, it's not going to happen next month. You know what I'm saying? So you got to compound your profits, right? So what do I mean by that? Bro, let's say in this case, you're risking $25 a trade, right? Cool. You take a 1-to-2, 1-to-3 risk reward, so you take your $50, $75. They start adding up. At the end of the month, you've probably done made $1,000 on that. You know what I mean? So now your account is sitting at $1,500. Now next month, your account could be sitting at $2,500, $3,000, so on and so forth as you start compounding. And then now, last question you're probably asking yourself is, when should I withdraw? The way I go about it is whatever amount of profits you're sitting in. So I like to withdraw weekly because I believe that as a trader, the beauty is in you paying yourself, right? For as long as the money is just fluctuating in your account or sitting as a balance, it's pretty much just money in space. Like it's not money I can go and buy anything. I can't buy this phone with that. I can't go buy this mic with that. I can't do nothing with that money, right? So the only way to do that is by withdrawing that money, and then you go ahead and spend it however you want, right? So I like to withdraw half of whatever amount of profits I made that week and then leave the other half in there so the account stays compounded. So as the account keeps growing, you're also paying yourself, right? Now, let's say I have a losing week, that obviously I'm not going to withdraw anything because I have a losing week. So I'd rather wait until I make that back. Now I'm sitting in profits. Okay, now I go ahead. Okay, let me take half of that, leave the other half in there, and start compounding from there. So pretty much you're paying yourself. A big reason why most people get unmotivated in the beginning is because they don't see no money. They're never paying themselves. They have this ideology of just let me leave all this money here and just let me grow this account to $1 million. Stop doing that, bro. It's not going to happen. Like I don't want to be that guy to tell you it's not going to. It could, but the odds are quite slim. Pay yourself along the way. Why? Because losing streaks happen, different market conditions happen. You know, you could deal with something personally that could affect your psychology. You start losing trades back to back, whatever the case may be. And now you're seeing no money. So you have all these negative things going on. Plus you're seeing no money in your actual bank account. That's a recipe for literally, yo, F this. I'm done with this and I'm moving on to something else. Meanwhile, if you're paying yourself along the way, even when those losing streaks come, you're chilling, you're relaxed because you've seen profits already, right? Another thing I was gonna say is platforms, right? So like I mentioned in previous videos, for those that haven't seen it, there's regulated platforms and there's unregulated platforms, right? If you're starting with 500 bucks, I'm gonna be straight up with you. You have to start in an unregulated platform. Why? Because regulated platforms are going to pretty much not allow you to make the money that you want to make. Call it as it is. For example, on 500 bucks, it'll probably allow you to risk maybe 5-10 bucks max. You know what I'm saying? That's like me pushing it, right? Meanwhile, in an unregulated platform, since you have 1 to 500 leverage, pretty much you could pretty much risk whatever you want. So it's up to you how much you want to risk. So at the beginning, let's say you don't want to follow my rule of, okay, I'm going to divide it by 20 and just risk. Let's say you don't want to follow. You know what, bro? I really want to make money. I want to give myself 10 chances. So on $500, I'm going to risk $50 to start up. Cool. You have the freedom to do that. Am I telling you to do that? No. But I'm just giving you an option in which you have the freedom to do so if you choose to do that, right? So at the beginning, bro, if you're starting 500 bucks, you have to do unregulated platforms. It's just simply as it is. I will leave the link down below to the platform that I use to pretty much trade, US 30, NASDAQ, stuff like that. Now I also trade futures as well, but I use regulated platforms for that because futures, it's all on regulated platforms. There's no unregulated platforms for futures. So if you're starting with 500 bucks, this is exactly what I would do, bro. Simple as that. I will focus on compounding. I will focus on a strategy that I understand, which is simple market structure and candlestick analysis. Nothing else. You can literally go on the charts and literally, like I explained to you, understand, okay, am I in a bearish market? Am I in a bullish market? Where am I in this market? In a retracement, in the part where I'm going to create a new higher high or a new lower low, so on and so forth. Okay, cool. And literally just focus on that. Risk management is key. And definitely trade forex. Do not jump into US 30 or gold or NASDAQ from the jump, because I'm gonna tell you right now, that's a recipe for disaster. Unless you have experience or you already understand the markets and how quickly things can move, do not jump into indices, bro. Like that's literally a recipe for straight losses, call it as it is. Again, it took me 3 years of me trading regular forex pairs for me to then go ahead and jump into US 30 and understand, okay, now I could get used to this. Now I can understand this, right? Do not complicate trading more than what it is, especially at the beginning. I know there's a million videos out there. Like I said, keep it simple, simple, straight to the point, things that you understand, and just build on those little by little. Take 3-6 months. Okay, let me trade just simple as possible, nothing else. Boom. After 6 months, okay, let me start adding time frame correlation. Let me start adding these little other things. Okay, 6 months after that, okay, maybe now I could get a little bit more complex. Let me move on to a pair that's a little bit more volatile. But by the time you do the math, you're already at a year, 1.5. Okay, cool. Now you have a 1.5 years worth of experience that you could back up and be like, okay, now I feel comfortable doing this. But do not just jump into deep sea without ever swimming in deep sea before. You know what I'm saying? So that's my advice if I was starting with 500 bucks all over again. That's exactly how I would run it up, at least to 50 grand. And then once I'm at 50 grand, then it's easy ball game from there to scale, because again, trading is all about capital, bro. It's not about whoever catches the biggest move, bro. Like you could sit here and catch 300 pips and throw a small lot size and make 300 bucks. I could come and catch 20 pips and throw a humongous lot size and make 20 grand. You know what I'm saying? So it's not really about the biggest move. It's more about capital. So worry about building capital, especially if you don't have much in the beginning. So if you're starting with 500 bucks, clearly you need capital. So focus on building capital, but not focus on, let me catch this humongous move. No, come into the markets with a game plan every single day, execute and get the F out. Okay, so AB Trades here, man. I'll leave the link down below to the platform that I use if you guys want to join the trading community as well. I do everything for one solid price. I do not charge like, one price for a course, one price for a class, one price for this. No, everything's bundled all together in one. The community is amazing. We live trade every single day. I have my course in there, the Discord community, where we all share different analysis and breakdowns every single day in trades, blah, blah, blah. And any future classes that I'm doing as well will be included in there as well. So link will be down below. I love you all, and I'll see you guys in the next video. Peace.